All right, we need to discuss a little bit about freight and how that impacts a couple of things. The first thing we want to talk about is freight from the perspective of when title to goods changes hands from say the seller to the buyer. That's not usually a big deal, but it can be a big deal at the end of the year. And then the other thing is freight costs as it pertains to how we value the inventory. Okay, so if we look at our slide here, it says purchases and sales of merchandise often involve freight or freight charges. It says the terms of a sale indicate when ownership, title, and control of the merchandise passes from the seller to the buyer. Okay, and so we have two terms that we need to learn here. We have FOB, that means free on board, shipping point, and FOB destination. Okay, so if we have a transaction for some inventory, which is FOB shipping point, what that means is that as soon as the seller delivers the merchandise to the carrier, whether it's UPS, FedEx, United States Postal Service, whatever, at that point we have title transfer and these become the buyer's goods and the buyer's responsible for them. So if we have a transaction FOB shipping point and the goods, the seller is located, let's say in Maryland, and the buyer is located in Montana, a lot of distance between those. As soon as the seller over in Maryland drops the items off to the common carrier, the goods become the buyer's at that point. Okay, so this is important information. For example, if the goods are destroyed along the way. Okay, if we have a FOB shipping point and the goods never reach the buyer is still responsible for anything that happens to those goods in transit. The opposite would be FOB destination, same situation, sellers in Maryland, buyers over in Montana, but the title transfer does not take place until the goods are received by the buyer. So anything that happens in the transit time is the responsibility of the seller. And again, if we have FOB shipping point and the goods are shipped out on, say, December the 29th, the buyer needs to include these in year-end inventory. The seller should not, and then vice versa with FOB destination. Assuming that the goods, I said December 29th, assuming that the goods arrive after the new year. If they arrive somehow the same year, then it doesn't matter. Okay. All right, so let's look at a little bit of an example here for shipping point. It says assume that on June the 10th, Net Solutions purchased merchandise as follows. They purchased merchandise from Magna Data, $900, terms FOB shipping point, and they also paid freight charges of $50 on that June 10th purchase. So we have a couple of things happening here. We're going to debit inventory because it's an asset for $900, and then we're going to set up an accounts payable to Magna Data for the same $900. That's our liability. So we don't have any purchase discounts or anything like that we have to account for. So journal entry explanation says purchase merchandise, terms FOB shipping point. Okay, and this is the second part of it here for the $50 freight charge. We're going to debit inventory again. So our inventory is now not $900 cost, it's $950 cost. Okay, and we're paying cash for this, so we're going to credit cash. All right, so we paid $50, we're going to pay $900 eventually, but our total value of inventory is $950 because without this freight, we can't get the inventory. Therefore, the freight is a legitimate cost. It is rolled into the inventory in this example. Okay. Now we have a situation, freight FOB. Let me go back. I probably should, let's see. Yeah, here we go. Yeah, FOB destination point says assume that Net Solutions sells merchandise as follows. So we've been talking about Net Solutions as a service-related business up to this point. Looks like they actually sell some merchandise as well. On June the 15th, they sold merchandise to Krantz Company on account, $700, terms FOB destination, and the cost of those goods was $480. $480 cost to Net Solutions. Net Solutions pays freight of $40 on that sale. Okay, so we have some things going on here. All on June the 15th. We can actually make this all part of one journal entry, but we're going to split it out into 3 separate entries here so that maybe you can see it a little bit better. So the first and biggest part of it, as far as the sales transaction is concerned, is we're going to set up an account receivable, subsidiary account, Krantz Company, for $700, and we're going to correctly credit sales for the same $700. This credit here would be the same whether we set up an account receivable or whether we received cash. But we also have to expense the amount of inventory that we no longer have, and so we're going to debit cost of goods sold for this $480 cost. That's our debit. And then inventory went down by $480, so it's left the building. So the asset inventory goes down by $480. We do that with a credit. And then we have a regular just operating expense here, delivery expense of $40. So if we think about this, we're really making, instead of making, let's see here, instead of making $700 minus $480 here, which would be $220, we also have a $40 expense here. But this delivery expense is not part of cost of goods sold because that's considered a selling expense. So that's a separate item. Okay, so these would be the 3 journal entries here based on the scenario up at the top of the slide. Okay, so this is basically just a little review slide here. Freight terms, when we're talking about FOB shipping point, title control passes to buyer, and FOB destination, title passes to buyer when the goods are received here. Okay, so again, the biggest thing that we get into with FOB shipping point and FOB destination, other than sometimes having to make an adjustment to inventory on the part of the buyer, if the buyer is paying those shipping costs, is we will get into scenarios sometimes where you might see a question where the seller made this sale on December the 28th, and they shipped the goods December the 29th, and the goods arrived January the 3rd. And it was FOB shipping point, and they're going to ask you, who has title to the goods, and if the seller included it in the ending inventory for the seller, is that a problem? And if the buyer didn't include it, is that a problem? And so on. So these are the types of questions that you might see with regard to shipping point. Okay. We're going to skip over slide number 35, and then the next video we'll pick up with slide 36.